Hello everyone and welcome back to the channel. First, I do want to apologize for not uploading in quite some time, but I am back. I have time to really focus on this YouTube channel now as well, so I'll be doing a lot of videos coming very soon. You'll start seeing them being pumped out very regularly, and also I'll start doing live streams as well. But now that I got that out the way, again, I do want to apologize. But in this video, it's going to be kind of a beginner / intermediate guide on how to actually read the footprint and how to actually start trading it. Okay, so even if you're quite advanced and you're quite what you would call yourself an expert at reading the footprint, still there are many people who have had many years of experience in the footprint and will pick up some information and be like, I never saw it that way, or so it's well worth watching. But let's head over to the chart. So for those of you that don't know, this is DeepCharts. It's a platform. It's quite a new platform. It's an order flow platform, and I've recently started using it for a few months now, and I'm actually very impressed by them. But essentially, you can get this information from any order flow platform. This video isn't about which platform's the best. It doesn't matter which one you use. If they have a footprint, you can interpret that data and make trading decisions. Okay, so you don't have to use DeepCharts in order to do what I'm about to do. You could use any order flow platform with a footprint. Okay, so first things first, what are we actually looking at? All right, so my footprint chart is customized to be the delta footprint. Okay, and the reason I like the delta is because I'm kind of used to it. It's what I'm used to. I've trained my eye to read the delta in real time, but you can use the ask and bid, and I will do a separate video on how to read the ask and bid. But for me, it just makes it a little bit more complex. You know, it adds a little bit more noise that's unnecessary, and for the style I trade, I don't really need to know the ask and bid. Okay, so I'm going to show you how I do it. If it's not for you, that's absolutely fine, but if you are curious and you would like to learn, then this video is for you. Okay, so don't be overwhelmed by all these numbers. All right, it's actually very, very simple. What you're looking at here is dead simple. Anything in green, so there's 5, 41, 37, etc. These are additional buy contracts. Okay, anything in purple, like this 165, 59, are additional sell contracts. Okay, so say for example there were 100 buy contracts traded in this little price range. Okay, and there were 50 sell contracts traded here. The difference between 100 and 50 is 50, right? So this would show as 50 buyers. Okay, so it's literally just the difference between buy contracts and sell contracts traded within that price range. Very, very easy to understand. Okay, and you can see it in real time moving. If you actually look at the, you know, as buyers and sellers come in real time, you can see the numbers are changing, you know, in real time. And that is very important to keep your eye on, especially in key areas. But that will be a bit later in this video. I'll show you what I mean by that. Okay, so now that we cleared up what exactly you're looking at, very, very simple stuff. How do you actually interpret it? Now, the first thing that most people do when they get into order flow trading or footprint trading, etc., is they think bigger is better. Okay, because it's logical to assume if there's more buyers in the market should go up, and, you know, vice versa. If there's more sellers in the market should go down. But the reality is that is not how it works. I wish it worked like that. That would be great, because then it would be so easy to make money. Everyone would be a billionaire, and, you know, yeah, trading would be done and dusted. But we all know, unfortunately, it's not that simple. Okay, size doesn't always guarantee the market's going to go in that direction, because all you're seeing in terms what the footprint is actually showing you is only showing you one half of the equation. Okay, it's almost like a balancing act at any given time, right? It's only showing you the aggressive orders. What are aggressive orders? So aggressive orders are market orders. Okay, so remember, in the market you always have two types of participants. You've got aggressive and passive. Okay, and an easy way, those are the technical terms, but if you want to, you know, make it easy to remember, aggressive are people literally hitting buy, sell, you know, getting in at that moment, at whatever's the next available price. They don't care, you know, they see something, they're clicking buy right now, you know, the instant execution, right? Whereas passive are pending orders, essentially. You know, if you put a sell limit, for example, or a buy limit order in the market, that is a passive order. You're not instantly in the market, but you're saying, hey, look, if the market gets to, if I place a sell limit here, I'm saying if the market gets to 30,070, I want to get in, right? Okay, so I have a sell limit here, and when the market hits 30,070, it matches me up with the next available aggressive buyer, and boom, the trade has been made. I am now in the market. But the moment I place that pending order, I'm not actually in the market. I can cancel it at any time. I have no obligation to have that order executed. It's entirely up to me, right? So that's the difference between passive and aggressive, okay? And the footprint is only ever showing you aggressive. And it can only ever show you aggressive, because if it showed you passive and aggressive, it would just be zero. Everything would be zero, because you cannot get into the market without an opposite side of the trade. Whenever you buy, someone is selling you that position, and vice versa, right? So if it did show you aggressive and passive participants, everything would just be zero. There would be no difference at any given time, right? So keep that in mind, right? Okay, so now I want to break down what aggressive participants are. So I explained how, market execution, people who are like market orders, people who are getting in aggressively, but that's not the full top Let me pull up an image for you. This is something I had created. Now, if we go to the top left, okay, it shows us what it is. Okay, so the first one are new aggressive buyers, right? So new buyers hitting, the buy button, right? They then get matched up with the closest sell limit, okay? So really simple to understand, right? And therefore, on the footprint, they appear as buyers, right? Okay, really, really simple. Let me just zoom out a bit. Okay, same with the sell side, right? Someone hits the sell button, they get matched up with the closest buy limit available, and therefore the footprint shows it as a sell. So these two are easy to understand. But it gets a little bit more tricky when it comes to take profits and stop losses, because you can see them in the footprint, all right? So now say you're in a buy position and you set your take profit, right? So you're in a buy, you set a take profit, your take profit is therefore higher up, right? And it's a pending order. What is a take profit order? It's actually a sell limit order. Okay, keep that in mind. Your take profit as a buyer is a sell limit order. So what happens when the market comes up? Imagine you had, imagine you bought here and you put your sell limit at the top of this wick here, right? And the market went up. What actually happens in that moment to your sell limit? It gets matched up with the next available aggressive buyer. So what appears on the footprint? Buyers, right? It appears as a buy. So loads of buyers getting their take profit here actually appears as buyers, okay, on the footprint. So that's why you will see at obvious highs, you'll see a jump in buy volume. That's buyers taking profit. That's them getting the hell out, basically, taking their money, right? Now, let's move on to the next one. Same thing with the sell side, right? So if you're now shorting the market and you're actively in a sell position, right? Imagine you sold up here and you put your take profit down here. What is your take profit? It's a buy limit this time, right? So this is a buy limit. So what happens when when the market goes to your buy limit? It matches you up with the next available aggressive seller. Exactly, right? Next available aggressive seller, and therefore it appears as a sell on the footprint. So again, sellers getting their profit taken, or sellers having a take profit hit, will look like sellers on the footprint, okay? And that leaves us with one last scenario, stop losses, okay? So existing buyers having their stop loss hit, how will it appear on the footprint? Well, this time stop losses appear as sellers, okay? And why is that? Because a stop loss is not actually a passive order. It's not a buy limit, it's not a sell limit, it's actually a stop order. Okay, and they don't appear on the depth of market, on the order book. They're the most invisible orders of them all, okay? But they get converted into a market order. So, say for example, you bought right here, right at the top, and you had your stop loss here, okay? Your stop loss is what type of order? It's a stop order, right? So you've bought, and your stop, it's a sell stop, right? It's a sell stop order, sell stop order. I'm not going to write it out, but a sell stop order. So when the market comes down and triggers your sell stop instantly gets converted into a market order, into a sell market order, and therefore it appears as sellers. So buyers getting stopped out look like sellers in the market. And finally, sellers getting stopped out. Imagine you sold, let me just clear this up. Imagine you sold right here, and you had your stop loss up here, and the market went up. Your stop loss is a buy stop order now, right? It gets triggered, it gets instantly converted into a market order, which is therefore a buy order, and therefore it looks like a buy in the market, right? So I hope that kind of makes sense. So just to run it up one last time, buyers entering aggressively, so hitting the buy button will look like buyers. Sellers entering aggressively, hitting the sell button will look like sellers. Buyers having their take profit hit will look like buyers. Sellers having their take profit hit will look like sellers. Buyers being stopped out will look like sellers, and sellers being stopped out will look like buyers. Write that down, put it in a little chart, write it down somewhere, and then keep that in mind. Try to learn, you know, what is what, right? Once you understand that, you can start reading what is actually going on here so much easier, right? Because then it becomes quite obvious, right? Because all you now need to do is pair it up with a tiny bit of logic. And what do I mean by that? Well, let's, for example, look at this, for example, right? Really, really simple. We had all this consolidation, right? This is the 1 minute chart, so it's not actually a huge amount of consolidation, but nonetheless, about 30 minutes of a sideways market, just before the market opened, right? Imagine all the people who sold here, right? All the people who sold aggressively, where are all their stop losses going to be? Just have a guess. Where do you think is the obvious place where a stop loss would be? Well, obviously just above, you know, this range, right? They're going to be somewhere. Now, they're not all going to be exactly in the same spot, because everyone's got a different kind of trading style or whatever. Some people might be looking for a bigger stop, some will have really tight, but nonetheless, stop losses for the sellers are all going to be in and around this kind of area, right? So you would expect when we get to this area, something's going to happen with the volume. And it did. Look at the buy volume, okay, the delta, in this area. You see it go higher, right? It went from, you know, kind of, you know, 6, 11, 69, 22, whatever, to 68, 61, 84. There was a clear increase in buy volume, right? Why do you think that is? Are those all fresh breakout buyers? Now, don't get me wrong, there might be a few fresh breakout buyers, always breaking out, buy. But it's also going to be a lot of sellers who are still in this position, who maybe didn't take profit, didn't get out, didn't go to break even, whatever it might be, getting stopped out essentially. And that is what you're seeing there, that little spike in volume. It's not a huge amount, but it's there. And the same goes for the other side, right? Think about all the people who bought in this range, right? And then the moment, where do you think a lot of their stops are going to be? Well, it's going to be in and around this region again, right? And look what happened. When the market opened, all of a sudden you see a big chunk of sellers appear. That's a lot of buyers getting stopped out. Okay, that's not necessarily new fresh sellers selling. That's buyers getting stopped out the market, right? So as long as you can recognize structure and use a bit of logic, you know what to chase. Do you know what I mean? This is what's important, because you don't want to chase just any volume in the market. You want to chase the correct volume, all right? And really, the key to footprint trading is being able to read what I like to call fresh volume and what is old volume, okay? I don't want to chase volume that's old. I want to chase actual, real, aggressive buyers and sellers. I want to only chase this. I want to identify only these people. I do not care about these people. I don't want to jump in for a buy once a bunch of buyers are taking profit. That's not good, right? If a bunch of buyers are taking profit and I'm entering for a buy because I see it as, oh, there's loads of buyers in the market. Come on, do you know what I mean? I'm entering when other buyers, smart money, is getting the hell out. That's not a smart move, right? I mean, you could make an argument about the stop loss. If a lot of buyers got stopped out, might be a good time to jump in. But again, from my experience, it's best to not jump in on these, on this volume. It's this volume you want, right? The actual true aggression. And there's only one way you can really recognize who these people are and where they come in, right? And that is down to using logic, okay? So let's look at the market right now. Where are we? Okay, so we're just rallying up right now. So we're going to try and zoom out a bit, okay? And I want to show you where, you know, obvious highs and lows and all that kind of good stuff is, right? So we had this high here from yesterday. So I'm just going to mark that out real quick. Right? Obvious high right there. Okay, beautiful. Have we got any other highs from recent times? We've got one right there as well, a little peak. I'm going to put a line there as well. And I don't think there's really anything in the recent times that kind of coincides. So let's zoom in to that peak there and see what happened, right? So we're going to zoom in, still zooming in. Bear with me a second here. There it is. Oh, look at that. Exactly on that level, you had 173 extra buyers appear. Now, using logic, what do you think those 173 buyers, what do you think that's fresh buyers jumping in? I don't think so. Right? I don't think that's fresh buyers jumping in. Is it sellers getting stopped out? I mean, it could be, right? It could be sellers getting stopped out. But remember, that high was from yesterday. Are there still going to be sellers in the market? It's exactly on the high. Does that really make logical sense that it's sellers getting stopped out? Probably not. I think those are buyers taking profit, right? It just makes sense, right? Imagine you bought earlier on, you know, a few minutes before that. You caught this nice little rally up. Where are you going to set your take profit? Probably there, right? Just logically, a lot of people are just going to set the take profit there. It makes sense, right? Logically, it's a good place to take profit. It's an obvious high. I'm probably going to set my take profit there. A lot of people are. So when you see that spike in buy volume exactly on that level, using just logic, right? Nothing else. You're not using any magic here, just pure logic. You're probably, you know, easy to kind of deduct that is probably going to be buyers taking profit, right? In and around that area, you're going to see buy volume spike up, most likely because buyers are taking profit, okay? So do you want to jump in and chase that 173? Probably not. Now, in this case, it did kind of work out for you, right? But believe me, the market, most of the time, that's not going to work out, right? If you just chase, take profits, you're going to get, generally what happens, you'll enter and then the market will kind of reverse and then stop you out and then whatever. Do you know what I mean? You're always going to be like, oh, I'll always enter at the wrong time. It's because you're chasing volume that is actually people exiting. You're not chasing entry volume, you're chasing exit volume, right? So, yes, in this scenario, it did kind of work out. If you did enter there, you would have been fine, but most of the time, that's not the case, right? So no, we want to ignore that volume. That volume, I just want to ignore it. Same with probably this. This is probably an element of people taking profit a bit before. Not everyone has their profit to the T. You got to remember, people are be a bit strategic with how they place their take profits and whatnot. But essentially, all this kind of volume, I'm not really interested in it, okay? What I'm interested in is the volume that isn't on unexplored territory. So what do I mean by that, right? So as we push up a little higher, okay, and as we kind of start going sideways a bit into this kind of whole area, right? Anything after, you know, where we have already traded to, so anything kind of like within this sort of area, right? All this kind of area is interesting because it's not going to be any more take profits or stop losses, right? Could be stop losses actually, but it's not going to be take profits anymore, right? So, you know, for example, these buyers here, they're not take profits. Because if they were buyers taking profit, they would have been triggered out here already. You know, they would have already been triggered out. They would have been triggered out on the last candle. We already went to that area, right? So it can't be buyers taking profit. That volume there you're seeing, that 59, it's not a great amount, but that 59 is actually real aggressive buyers. These are real buyers. Okay, that's the volume you want to look at right now. That's the like, ooh, interesting. I hope that kind of makes sense, what I just said, right? I hope that kind of, you know, people can wrap their heads around what I mean by that, right? Because it can't be take profits. It has to be fresh buyers, because we already traded it. We already were at that level here. You know, we were already at that level here. So if it was, you know, buyers earlier on with their take profit, it would have already been triggered. You know, they would have got out here. You would have seen that volume here. So the fact that we had a little spike in volume here, that's actually buyers, real buyers coming into the market, okay? So that's the kind of volume you want to look at. Now, it's only 59 contracts. It's not a huge amount. So it's not something you want to chase again, because it's not really that aggressive. But say that was really aggressive volume coming in. Oh, shit, yeah, jump in. That's interesting, right? Now, this sell volume that we're seeing here, okay? What do you think this sell volume is? Just using logic, right? Imagine not everyone, once we hit like an important area where like a lot of buyers are taking out the taking their money out the market, like we had here. What do you think? Not everyone is going to be getting out, right? Some people will start trailing. Some people will start, essentially trailing their stop loss, right? They're saying, okay, let's see how much further we can go, and then we'll keep it nice and tight, and we'll get trailed out at some point, right? The moment we have a little pullback, right? It's only a minor pullback. Look at the volume all of a sudden spike up on the sell side. What do you think that is? Well, do you think it's fresh sellers jumping in? Probably not. Does it make any logical sense for big institutional sellers to jump in after this very aggressive push up? Probably not, right? Bit crazy if you do that, okay? So unlikely to be fresh sellers. So therefore, we don't want to chase that volume again. We don't want to be like, short the market, big sellers. No, I don't think those are fresh sellers. We're not interested. But what do you think it could be, right? Could it be sellers taking profit? No, that doesn't make any sense. Like, we've just pushed up. Where the hell are the sellers meant to enter? If they did, why would anyone put their take profit there? It doesn't make any sense. There's no logic to it being sellers taking profit. So what else could it be? Could it be buyers getting stopped out? Actually, yeah, that kind of does make sense. That looks like a viable scenario. Buyers who were still in this move, who didn't take profit here, who are trailing, start trailing their, you know, stop loss as we push up. See how much momentum. And the moment it pulls back a bit, boom. All right, they get triggered out. They're stopped out in profit, right? And you get that spike in sell volume. Okay, that makes sense. So do we want to short here? No. Again, remember, we only want to short or buy, right, based on these two scenarios, okay? We don't care about these people. It's good to know, it's good to identify, right? But this is really the only thing we actually want to pay attention to, okay? Right, so let's keep moving. We have a bit of up and down, whatever, you know. We do have a little bit. Do we have a lot of aggressive buyers coming in areas where we would expect? So remember, this was the current, at that time, this was the high, right? Look at the area on these candles below this wick here. Do we see aggressive buyers coming in? No. So you don't want to buy here either, because there's no one really buying. 19, 7, 17. It doesn't look good, right? Now, this is unexplored territory up here, okay? This is, you know, we broke that little high, so it's hard to know exactly what this volume, and it's not big volume as well, so generally you ignore small volume, right? We only want to be interested in bigger volume, right? Here we have a little spike in buy volume. Could that be buyers now, because we had such a hard push up? Do you think that's buyers chasing the market? That does kind of make sense, right? It could be buyers chasing the market, but it's, again, not huge amount of volume, right? I think it's still buyers trailing, right? I think there's a lot of buyers trailing. They got stopped out a bit here. Some, again, stopped out. I think as we moved up, again, more buyers getting trailed out, stopped out. I don't think really any of this is real kind of volume to be to pay attention to, right? But we want to see anomalies in the volume, where it's just all of a sudden a chunk of bigger volume coming in where we can be 100% sure that is fresh buyers or fresh sellers, right? Now, this actually is legit fresh sellers coming in to the market, I think, right? And these are legit fresh buyers coming into the market, because we already traded, this is now the low, right? All this, these are actual real sellers in my opinion, okay? Or it could be, and this is always another option. Now, another option which I didn't actually put in this sheet, but it should technically have been put there, are people who are like manually getting out the market. So imagine, you know, you're in a buy and you literally click flatten or the X button, you know, to get out the market. That is a form of instant execution, so you will appear as a seller. So a buyer manually exiting, so actually clicking the exit button manually, will appear as a seller, and a seller, someone who sold the market, manually getting out, will appear as a buyer, right? So you've got to keep that in mind as well. Bit harder to tell, because who knows when manually someone's getting out. It's a bit harder to kind of identify, right? But essentially, generally speaking, you can kind of, again, with a bit of logic, you can kind of figure out who's doing that, okay? Now, if it becomes too difficult to read, you just don't try and force an opinion. So this area here, I'm not going to lie, is a little bit more difficult to read, right? Because now it's become kind of, it could be a bit of this, it could be a bit of that. There's no real clear sign. You've got a little pockets of bigger volume, right? But at the same time, it doesn't quite make sense also, okay? The volume doesn't quite make sense. I do think those are real sellers. I think those are fresh sellers coming in, because it doesn't really add up for it to be, you know, buyers getting stopped out, because they would have been stopped out here already. We already got to that area. Same move here. You know, we already traveled into that area, so I don't think it's buyers getting stopped out. It does make sense that it could be fresh sellers trying to get the market back down, right? And you can actually probably just about recognize those sellers got out, had really tight stops, right? Some people got in here, some sellers, some large sellers got in quite aggressively. The market did push down, but as it came back into their kind of entry, you could see the volume again, very similar numbers spike up to the buy side. I think they got stopped out at break even, right? Little failed trade there. They tried to take advantage, buyers absorbed them, and all right, didn't work out for them. But at this moment in time, where did the real kind of buy volume come in? Again, you kind of want to follow the market trend as well. You don't really want to, I mean, you can trade against the trend, that's absolutely fine, but you've got to be very aggressive with your stop loss, like what these guys did. They've traded against the trend, but they were right. You know, they were very aggressive with their stop. They didn't actually lose any money. It's not a big deal, right? They got out break even. But you can't allow it to get bad. Do you know what I mean? You have to have really tight stops. If you're going with the trend, you can be a little bit, give it a bit more, you know, leniency. Okay. So in this kind of area, you really kind of want to be looking at buying unless the market pushes down a bit more and creates a little bit of structure, some kind of bearish structure. Then you're like, okay, I can start looking at shorting the market. But at this moment in time, you really only kind of wanted to look to buy for a continuation anyway, right? So we're seeing, so again, this 64, I'm going to guess, are these sellers getting stopped out. So the next real entry for fresh buyers, and again, look, there were some fresh buyers coming in. But again, look, even these buyers got stopped out pretty much at break even, right? Didn't kind of work out for them. So anyone buying and selling here kind of got stopped out on either way at break even. It didn't really go anywhere, okay? You could have jumped in at that 59 for a buy, you know, hoping for that continuation. Again, the volume isn't great. It's not huge amounts, so, you know, 59 is only 59. But nonetheless, you could have. But again, yeah, you would have got stopped out break even if you had your stop there. You know, if you had a bigger stop, you would have been okay, but it's not the optimal place to actually have jumped in. Those sellers, I wouldn't recommend you short with those sellers, but if you did, again, have a very tight stop at break even instantly. The moment you're in a profit, get that stop loss to break even. You know, cut that risk very quickly, right? The next area where you see real aggressive buyers come in is the 69 here, okay? It's really these people here. They're the next area where you would potentially want to jump in, right? Again, the volume isn't that great, but it's good enough, right? It's a half a decent amount of volume. Those would be the next people you want to kind of, all right, let's jump in, okay? Because again, this 64 are those sellers getting stopped out. That 59 are those buyers getting stopped out. So do you see how I'm breaking down the market on who is exiting and who is actually fresh and entering? If you can identify that, then you know that these are the next new fresh buyers coming in. All right, interesting. Let's jump in. Okay. Now you might be asking, what about Sam? What about these sellers here, the 65? Why don't we jump in there? Probably not fresh sellers, and I'll tell you why. Because again, we don't know who those sellers are, right? We're in unexplored territory. This area here hasn't been traded in the last few minutes, right? We don't know. It could be some buyers who entered, you know, here and here a little bit, wherever, having their stop loss and getting stopped out. That's more likely the occurrence. It's not concrete. It could be a mix of things, but it's not guaranteed. It's not like 100%, yes, these are fresh new sellers. We don't know that, right? It's in unexplored territory, so you don't want to chase it, okay? You only want to really enter your trades in areas where you know it can't be take profits and it can't be stop losses. It has to be fresh people. Then you can chase that volume, right? So yes, you could have chased this buy volume. You could have chased this sell volume. You would have got stopped out on both of them at break even, fine. And then you would have chased this buy volume and this would have really worked out nicely for you, okay? So where do you put your take profit? If you entered now at that buy, followed these fresh buyers, we know they're fresh buyers, right? Where would your take profit be? Probably at that next high, right? In and around where that line is, okay? So again, we see a little spike in buy volume in and around that area, right? Look at that. Go from 60, 77, 69. Nice little spike in buy volume. There's definitely some buyers taking profit here, okay? So again, do you want to chase that buy volume and enter a buy here? Okay, in this scenario, kind of did work out. Again, this market's very bullish right now, right? But generally speaking, no. These are buyers exiting, they're not buyers entering, okay? So we want to ignore that volume, okay? Now we've got a really random jump here of buy volume, 152. It's in unexplored territory, meaning it's, you know, a little bit high, a few points above the high, and it's a big chunk. That could be some really, you know, swing trading kind of sellers getting stopped out, right? A few points above the high kind of makes sense. All of a sudden, boom, big chunk of buy volume. It could be buyers taking profit. The reality is we don't 100% know who these buyers are. So are we going to chase them? Probably not, right? We don't need to chase them. We're ignoring them because it's an unexplored territory. We don't know. We can't identify for sure that these are fresh buyers. So we leave them, all right? Same with these buyers. We don't know. This is unexplored again. It's taken out the high. Same with these buyers. It's taken out the high. And these buyers, we don't know who they are. Okay, so we're not going to chase them, right? So let's move a little bit further up to the next area. So I hope you're kind of following along here. I know there's going to be a bit of a longer video, but I'm really trying to show you, you know, how it works, okay? How to actually, you've got to be patient because it's very difficult, I know, for a beginner to kind of just jump in on heavy volume. Oh, big volume, jump, buy, sell. But you'll get absolutely eaten up. You need to be patient, and remember, you're just waiting for people you can identify are real fresh buyers and sellers, okay? And you can only really identify them once, you know, we kind of go sideways, essentially in a range, right? You can only really, not always in a range, right? But as long as it's not in unexplored territory, we should be fine, right? We can identify who they are. So, you know, once this high was locked in and this kind of low here, like on this candle, all the volume in this area here is actually kind of legit, right? We can kind of identify, you know, maybe not the first candle here, maybe not the first few sellers here. That could be, you know, buyers who did jump in here. These are fresh buyers, right? That could be these guys getting stopped out potentially. Okay, so we kind of want to ignore that volume. But then this volume, that's real sellers, actually. That is legit real sellers coming in, 113. You could have jumped in with them. Okay? Now again, would I recommend shorting such a bullish market? Probably not. If you are going to do it, you're going to have a very tight stop. You know, here, maybe at break even once you got there. Or, you know, have quite a tight stop. But essentially, those are real sellers, right? These are real aggressive sellers trying to get this market down, okay? Now, did it work out for them? It worked out a little bit. Kind of came back up. They didn't exit their trade. You're seeing no real buy volume peak in any of these areas, so they didn't get stopped out. They're still actually very much in the trade here. But you look at this kind of 178 poking at above the high here, you can kind of make out that these sellers got stopped out up here. Whoever this big seller was, big institution, they got stopped out a bit higher up here, right? You can kind of see it happen, right? Using a bit of logic. Now, where did, again, fresh, bigger buyers come in? Really, here, this 50 and 40. You know, those are real buyers. Now, if you're only looking to buy and you're looking for bigger buyers coming in at an area, and, you know, sorry, not at an area, but bigger buyers coming in who are fresh new buyers. So basically in an area where it can't be stopped, so it can't be take profits, these are the people. You know that can't be stop losses, that can't be take profits, because otherwise it would have been executed here, here, here. We've already traveled into that area plenty of times in the short past. So they can't be take profits or stop losses or anything like that. It's got to be fresh buyers. And it came in chunks, right? 50, 40. If you're looking for an entry, that might not be a bad one, right? You know, jump in there, boom, stop here, and ride the wave up again, right? If you're only looking for buys in such a bullish market, you probably will be, right? This is a very bullish market, right? And, you know, that 17A, again, unexplored territory, so we're not interested. Again, what do I mean? It's created a new high. We've gone past the last high. All this volume after that high, we don't know. We just don't know what it is. Now, I would guess that is probably some of these sellers here getting stopped out. It makes logical sense that they put their stop, you know, just a few points above the high, and as they got taken out, and that's why you got this spike in volume. But again, look, are there going to be some fresh buyers here? Of course. You're going to get breakout buyers, you're going to get, but it's not guaranteed. Do you know what I mean? It could be a bunch of scenarios, and that's why you don't want to trade it, okay? You don't want to trade it. And you can see, look, again here, there are some sellers coming in quite heavy. These are fresh sellers, but they're just getting eaten up today. Sellers are not having a good time, right? I wouldn't say that these are fresh sellers necessarily, because after a push up, kind of retraces, it could be buyers getting stopped out in profit trailing. So again, I want to ignore that volume. Right? Those sellers here, yeah, these are legit. A lot of these people are going to be real sellers coming in, trying to get this market down. A lot of big sell volume trying to get the market down, but they're just getting absorbed. Buyers are really holding them off. And then the moment we break this little ranges high, look at that, big spike in buy volume again. What happened to all these sellers? They got stopped out. Boom, they're out again. Right? Probably don't want to be selling. Do you know what I mean? You got to wait for sellers to actually make a little bit of progress. Then you can start looking at, all right, let's flip. Let's start looking for shorts. But in this moment in time in a market like this, yeah, you don't really want to be selling. You want to kind of, you know, just buy. So all you're waiting for is to identify bigger fresh buy volume. And there's actually quite a few little areas here, right? This 95 is not bad. We know that's fresh buy volume, right? We have traded in this area already, so it can't be stop losses, can't be take profits, etc. It's fresh buyers, right? That 67 there, fresh buyers. There's a few little pockets of decent buyers coming in where you can jump in, right? And essentially the same thing happens over and over. I mean, there is definitely some sellers here who are, for some reason, constantly trying to short the market, and you're getting these guys here coming in quite heavy, and every time we break the high, the consolidation, you can see them all getting stopped out. I mean, you know, what can you do? So when I say you want to chase the correct volume, you've got to use logic in that scenario, right? So yes, we only want to chase aggressive buyers and aggressive sellers, people who are entering fresh. We don't want to chase take profits, stop losses, or anything like that. But also identify, I think what's important as well is identify what kind of condition the market's in. The market is really steep and it's just going up and up and up and up, and you're seeing sellers constantly coming in, but they're not able to do much damage. Don't sell. Just wait for that buy opportunity. Wait for a bit of real, fresh buyers to enter again, and follow those guys for the next move up. Now, eventually, they're going to fail, right? It can't go up forever. There's going to be a time buyers will stop buying aggressively or start balancing out, and then those aggressive sellers that keep wanting to push the market down will start actually being somewhat successful, and then, a whole new wave of opportunity opens up. But in this moment in time, yeah, you don't really want to be shorting the market just yet. So that's how you read the footprint, the delta footprint in real time. So I know this was probably quite a long video. I hope you guys enjoyed it, and if you did enjoy this video and you want more breakdowns of how to read the footprint and everything order flow related, do let me know in the comments down below. What do you want me to break down? Volume profile, etc. You name it, let me know. I'll make a video on it. But apart from that, thank you guys for watching, and I'll see you again very soon. Take care for now. Bye bye.